Okay, good afternoon, everyone. Today is the 6th day of June 2023, and I'm here to share with you what just happened and what I talked about in my video. I think talked about on my videos. What I talked about in my video on the second, is it the second or third of July, the beginning of the month, about gold. Can watch my second or third video. So generally, I'll be looking at the entire markets today and what happened. So generally, Jerome Powell FOMC meeting yesterday, the whole FOMC Federal Market Committee decided that they still want to be bullish to tame inflation. So today we're expecting some series of events, which is today is the Thursday. I talked about it on my video at the beginning of the month of July. So, what I talked about was what's happened today. So let's just look at what happened today. Today, I think today was more. So we have three important events, which is the non-farm payroll, and we got about 497,000 jobs. What's it called? On the ADP non-farm payroll, a higher than expected should be taken as bullish for the USD, while lower than expected should be taken as. So today you can see the reason why the USD pair actually rose seriously, and you can see that gold has been, I love using my Farley structure. Dollar has been trending perfectly well to the upside. Change character from here, came to retrace, broke structure again, came and found support, which you are seeing here right now. So I know I have a supply. Should I call it a supply? Because if this is a break of structure, this is a break of structure that took the market to the upside and became bearish before we change character to the upside here. I'm a market structure and a price action trader. So are we going to find resistance and continue going down here? That's what we're about finding out right now. So what I do is, since I'm a market structure and price action trader, and follow every structural level and how it works from the monthly to the daily to the weekly. This is what we have on the daily time frame for the dollar index. So the dollar must continue to the upside. I just need a proper switch breaking structure, then testing that broken structure. It's turning to from supply to demand to proper support or demand zone, then continue go to the upside. That's the bullish case scenario for gold. I always give you the bullish and bearish case scenario. Then if we're finding resistance in these supply zone, which correspond with this supply that we broke down from the Farley charts, and switching to the downside, probably on the 1 minute on the 1 hourly structure, probably maybe let's see. So what I'll be looking out for is if this is truly a switch, then we need to take some liquidities to the upside. Taking those liquidity, then finding a way to switch this market, then enter from the fourth leg back to the downside to continue breaking down. So I use my 1 hourly structure and my price action strategies. The price actions are your short patterns and the rest of them. So I'm here to talk about what gold is doing in respect to what I just talked about on the dollar right now. So I'm still on this falling wedge. And I told you on the second, let me share the date I did that video. I think I did that video. The video was uploaded when? Let me go to my channel. The video was uploaded on, hold on, Gold July 4th video. Okay, this was a video, and this was July 4th, and I think this was on the second. 3 days ago was on the 3rd. This was one I did on the 3rd, and this was one I did on the 4th. So we had two videos. I explained how gold was going to behave perfectly well on this video, and we did a proper video on gold again using this particular video on the 4th. Independence Day for America video. So this video actually, give an insight of how if gold, gold doing a break and retest on the lower time frame, what's it called, a head and shoulders pattern, that if gold must continue. Okay, that's the video. So I just play. To watch my talked about everything here. So I'll just pause this and continue a video on the analysis as it's trending right now. So what actually happened that day was that gold was as in doing this, and I took a trade actually on this break and retest. So what gold did was a head and shoulders pattern break and retest. We should took a 114. I was waiting for that switch on the lower time frame. I guess in the 114 to 130, what's it called, 180 pips, and we waited for this price action to play out, which we had a switch to the downside. We came back today using these, what's it called, the events that happened today, the non-farm payroll, I guess where it came out positive for the dollar, and that was what brought gold back to this supply zone, I guess which perfectly correspond with our bearish resistance coming from the upside. So we did this trade, and we didn't take any other trade around this place. This was consolidation. So I was waiting if gold is going to break to the upside and reclaim, but we couldn't reclaim. So I think if I should come back to probably maybe the 1 hour, the 4-hourly chart. Okay, so maybe 2-hourly chart for it to be clearer. So what we did was, W pattern, head and shoulder, inverse head and shoulders pattern break and retest, and took this trade to 130, took profit. So we waited for this where gold actually did what, took liquidity and found what's it called, resistance on these particular 4-hourly structure. We treat 4-hourly structures. So on this particular 4-hourly structure, previous support, I guess that now broke to the downside and turned resistance. So I was waiting for the resistance to hold also on this bearish pressure, descending triangle, descending wedge, descending falling wedge to the downside. So I was waiting for it to retest this particular, which we did. We did a proper, remember what I told you on that previous video. Remember what I told you, that if gold must break, we did a break of structure, we need to come back to test these broken supports. Now, if you turn a resistance and we're not breaking above 130 to 130, 130 to 135, I even posted on the group today that if gold is not going above 125 to 130, if gold is not going above 125 to 130 to 140 area, reclaiming it and continuous market to the upside, gold is going to do what? That means this particular demand I was talking about on the, I think on the July 3rd of July video, that if this was indeed a very good, demand zone, that means gold would come and break above and continue an entry, give us an entry to the upside. But if it's not a very, very solid demand zone, what will happen? It will just do this joker, break and retest, and come and find resistance. If you can find resistance, what will happen? We are waiting for this that is happening right now. So for gold to fall back out of this broken structure on the lower time frame, broken structure to the upside on the lower time frame, falling back underneath it, what are you supposed to do? Go back to your lower time frame where it actually happened. I get it. So what I waited for was, I even mentioned it. I think I mentioned that if gold falls back below 1,912, are you getting it? That's the beginning of, it's a sell again down to where. So for gold to continue, if I'm to sell right now, I will just follow structure, and it's even perfectly working well. Why? Because look at when we found that rejection at that particular resistance, it came back and broke support to the downside. Are you guessing? So it broke structure to the downside. Then we came back for this supply zone, which perfectly entered. So if you're at 128, $127, $125 area, and your stop loss is above 135, definitely that's 100 pips. You would have made about from 125 to 1900 area, 230 pips to the downside. A very, very good trade. But I don't trade the lower time frame structures. I wait for my proper follow structures to happen if I trade. So if I'm to take a trade right now, I'll be waiting for whatever is going to happen here. I guess need to find a rejection on this broken, because we had a shift to the upside in lower time frame retested. So for us to even break down back with a very good break, and we're still finding resistance around this 1912, $1914 area. Sorry. So whatever I'm looking for right now is a 0.382 retracement, which you can see at 1912. If we're unable to break above 1912 again, which corresponds with this previous, support, this market broke out to the upside and gave us our support, resistance with very good area of value. You can see from the backside. Are you getting it? Now, this is a very good area of value I won't take trades from. So if we are unable to break back into that particular, what's it called? That means hold on, let me take all these things off. Okay. So if we're unable to break back into that 1912, that means I'll be using my Fibonacci trend extension to take a trade from here to here, and take maybe 1912 to 1900, 1912 to 1900, 1900, which is about 120 pips to the downside. So these are the kind of trades I want to take from the downside or from the lower time frame. This was the trade I took. Break and retest 1912 to 1930. I left, so I was waiting for this particular, but because of the news that was happening, we had a lot of news today. We had the ADP non-farm payroll. We have the initial jobless claim, which is negative for the dollar. So a lot of mixed feelings happened today. Service PMI came out positive. The ISM came out positive. So three positive news. Is it three? Four positive news. So let me see. Okay, the jobs came out negative. One. How many news do you have positive? 1, 2, 3, 4 positive, 5 positive news for the dollar, and 2 negative news. So, the majority wins the vote. That's why. And the report remark yesterday around 7 p.m. gave us what's it called? A hawkish move that's going to happen in the dollar. So it gave us a hint. So if you're on the group this morning, that was why I dropped that. If you must sell, if gold is not breaking above, I said if gold was not breaking above $1,925 to 130, sell $1,925 to 1,900, which is 250 pips, which is actually playing out for gold right now. So what you need to watch if you want to trade is proper market structure and good areas of value, knowing that if it does not reclaim 1,912 back, which shifted to the previous, what's it called? I should go to the one time frame. We shifted this market to the previous resistance zone. Look at now. So this was the previous broken support that has not turned resistance. So definitely, if this market shifted here and we tested here, this is your trade. 50 to 100 pip stop loss. Take profit at 1,930. That's your trade. That's the only trade you had on this particular move. If you wanted to take a 100% confirmed trade, because if this market was supposed to go back to the next resistance, major resistance, it needed to switch to the upside, which gave us a head and shoulders pattern break and retest 912 to 1930. Would have given you 180 pips. So right now, since we're breaking into the downside, as it stands right now, are you getting it? We just need to, find resistance, find a way on the lower time frame, find a resistance, put your stop loss probably. I think I'll use above this, what's it called, downward slope resistance. So I might use 1927 from 1912, 150 pips to 1927. I get it, 150 pips, then sell from 1912 all the way down to these particular support area first. So I will not just sell like that. Like I just said, I use my Fibonacci trend extension to find out whatever is happening to 1912, sell that market to $1,892 for gold, because this is where it will go. If it retraces just 0.382% on the downtrend, because this was a break of structure. So this 1, 2, 3 always breaks. 4 does not go beyond. So it's an Elliott wave actually trying to explain to you right now. So I should go back to 30 minutes time frame to do that Elliott wave. You will see that we did an Elliott wave 1, 2, 3 always break. 4 does not break 1, 2. Let me bring Elliott wave back so that you see whatever is. Hold on. Here's Elliott wave. Okay. Look at Elliott wave 1, 2, 3 always breaks a structure, to change character back to the upside. 4 cannot go be above 1. Are you getting it? Then your fifth leg, which is a very, very good Elliott wave, a very good Elliott wave trader, then expect what? A consolidation, and people that were trying to short liquidation to take everybody. Then after that, what happens? To take all these sellers that were here out. So the market actually does what? Find a way to consolidate around here. Then everybody that was shorting this trend, thinking we are going to the downside, take them out with that particular listing. Gave us an evening star, which you saw there. Are you getting a bullish reversal pattern to the downside, which now changed. This was a previous structure, actually changed character to the downside with that particular break of structure. So if you're a very, very good market structure and price action trader, you would have seen this and just saying that, okay, if there's a change of character to the downside, which means this whole area is a supply area. So whatever was even going to happen aside from the news was these, what's it called? Two liquidations again. The people that knows how liquidations work in this business. So these two places were what? Liquidations both up and down. Liquidity, these two places with liquidity both up and down to take what this market into these supply zone, and use the news to do a very, very big joker to the downside, which you are seeing here. So from the 15-minute chart, you see how this market is trending, that this market for it. So probably will sell in case this market is finding, if I bring my Fibonacci retracement tools in case this market is finding resistance back in this area. So if it's finding resistance back in this area and it's not breaking above 0.5 and below this broken structure, then we can take Fibonacci trend extension and extend our market below 0.5 or 0.382 to wherever we want to trend to, which is corresponding with our previous take profit explained below. So that's gold for gold. So I'll be talking about EURAUD trade right now. So my EURAUD trade. So if you know what you're doing, this is how your market does what trend. So if I should take these things off and do under Elliott wave to the downside, you will see that during my Elliott wave, we had 1, 2, then 3 always does what? Break a structure. 4 cannot go beyond above 1. 4 cannot go above 1. Are you getting the fifth leg to the downside? So this Elliott wave for you, Elliott wave impulse for you. So if this is going to play out, the minute 4 go beyond above 1, this trade is what? Invalidated. So that means we'll now do a fake out to the downside. Are you getting it? Reclaim this broken structure, reclaim 1912 back to the upside. Once you're reclaiming 1912, you know that gold has turned bullish again, because it might just come and retest 1912 and break $1925 area, changing character back to the upside. I get into 1936, 19. and we're testing 1920, or we're testing these 4-hourly, what's it called? Because this what's it called, falling wedge is actually a bullish continuation pattern. I only trade 4-hourly structure. So if you're testing that what's it called, trend line to the downside, this is what's it called, these falling wedge resistance trend line, bearish pressure trend line. If you are breaking above that bearish pressure trend line, you should know that gold is what now becoming bullish. But I need a change of character above this particular $90.27 area. Are you getting it? You can give me that, because it's giving me a bullish vibe already from where we are right now. So watch out for your major areas of value. So as the most important area of value right now in this market, going to the upside and going to the downside, is actually what? 1912, $1,912 area. So reclaiming that area, because gold is still bullish as it stands. Because if I should look at market structure very well, this is still what? A demand zone on the lower time frame. So if that's a demand zone, whatever gold is doing right now must not break above 1912, reclaiming it, because it will continue breaking to the upside. And once we break above $1940, we're testing it. This is my conservative entry back to continue this bullish continuation chart pattern we have on the 4-hourly chart. Because whatever you're saying here is a bullish continuation pattern. So this demand has not been validated yet. It has not been validated yet until we break structure with a 4-hourly candle, proper 4-hourly candle, probably to $1980, $1960 area. Then we're testing that supply zone. That broke the structure to the downside. Then we can take this market to what? $1,800 area on the bearish side. So if you are trading market structure and you're very good with price action, you don't need indicators. It will tell you whatever is happening there. Trust me. You don't need indicators. It will tell you whatever is happening if you're a very good market structure trader. You don't need indicators. It's telling you. So trading is a game of probabilities, right? Trading is a game of probability. So if you know your areas of value and your broken support and resistance, reclaiming your support and resistance, you will know that this is where I'm to enter, risking 100 pips to make 500 pips, or risking 100 pips to make 600 pips. Because if I'm reclaiming 1912 back and, breaking above it and retesting it, I might start entering small from here. Because the moment I see a shift again, and here this area becoming a proper demand zone, is telling me that we're coming to break this particular bearish pressure on the 4-hourly chart and continue this market to the downside. So I might use a one lot size from here, putting probably 100 pips from 1912 to 1902. Are you guessing it? Risking probably starting with one lot, 1902. Are you guessing it? So I'm risking it to 1902 or 1900, 1120 pips or 150 pips to 19. Are you guessing it? Or 200 pips even, depends on how many lot I'm willing to risk. But at least I'll be seeing the shift on the downside. So I might not even take. One thing about stop loss is that if the market is actually going to go bearish even after reclaiming it and wants to do a joker, you see the switch on the lower time frames. For you seeing the switch and breaking above a particular area, and you are seeing this major move happening, you will see it on the 4-hourly candles. Trust me. You see it on the 4-hourly candles. The 4-hourly candles, the only way this market will be bearish for me is me seeing the 4-hourly candle closing below this wick, not just wicking above and coming back. No, closing below that wick. I guess maybe two bullish, two red candles closing below that wick. And here I know that we now have a way of finding a way to switch and come back to these supply zones again. So once we touch that supply, 1912, then I can start selling to the downside to probably $1,900. So this is what I have for gold right now. I've given you all the case scenarios, and every case scenario I've been giving you all the way from my gold videos from March have been coming out 100%. When I watch my November, July 3rd video and July 4th Independence Day video, I talked about this particular 180 piece move. I even talked about this particular 250 piece move to the downside today. So I only trade my proper market structures. What's it called? I only trade my proper market structures on, on the 4 hourly charts because I don't want to stress myself. Because as it stands right, we still have what you can see how it took liquidity yesterday with this liquidity because whatever you see there is liquidity. You saw how we came and took it with this liquidity, liquidating everybody here and also taking this liquidity. So before doing was switching to the downside. So I have more than 4 ways of looking at gold using 4 charts, as you can see. So whatever you're seeing right now, gold is bearish. Broke change character to the downside, came back to supply, and even broke structure. That's a proper switch for you, even though it's a lower time frame structure. So gold has shifted to the downside, change character, broke structure. That's a switch for me. So those are the 2 things I use in looking at switch. So this whole area right now, 1925 to 1927 to 1917 area are my, what's it called, as a market structure trader. 1920 to 1925 area are my supply zones or my roller supply zones. So if it's actually finding rejections and shifting, the way it shifted here right now, are you getting it? I'm seeing those shifts. That's what I call shift. This is what I call shift. Broke structure to the upside, came and broke that structure. I broke structure to the upside, change character to back to the downside, coming back to supply, finding supplies, and even breaking structure. So that's a shift for me. That's how I do. That's what I call a proper change of character. Are you getting it? So whatever I'm looking at right now is coming back to the supplies. Are you getting it? And continue to the downside because on the 4 hourly chart, you can see that, or probably a 2 hourly chart, you can see that this was what the previous resistance, now turn resistance again, and even breaking structure to the downside. So if I'm you, just wait and come back and find your 5 minutes, 15 minutes switch. You'll see it there. 5 minutes, 15 minutes switch, it should be there. It's really going to continue to the downside. Come back, find the switch. Are you getting it? Break structure properly. Then take profits. Are you getting it? Probably to your 1090 area. Come back again to this particular supply again, new supply. Then switch to the downside. So if you find a double bottom here, then and broke structures, changing character the way you did here again, then you can enter from here to continue market to the upside. That's why we are going to go into Euro AUD and tell you whatever is happening in Euro AUD right now. So here's my Euro AUD chart, this Euro GBP. So let me go to Euro AUD, this Euro AUD, now this Euro card. So on the Euro card, we're actually doing what? I'm not talking about it. This is an ascent triangle. If it breaks and retests and holds, put our trade here and continue. I want to do Euro AUD because Euro AUD is giving me a very, very good vibe. Hold on. Shift tab. Shift control tab. Okay. Okay. Watch this Euro AUD right now. This Euro AUD. So Euro AUD, I'm going to start from the weekly time frame and tell you why I'm bullish on Euro AUD. So I don't know if I'm going to do it separate, but I don't know. Hold on. Let me do Euro AUD for you. So should I take everything off? Hold on. Let me see. Euro AUD. Let me see if I have it cap. Let me calm down. I'm bullish on Euro AUD. FOREX.com. Seriously, I'm working on all. Okay. So okay, this is the weekly chart on Euro AUD, and as you can see, from the beginning on the weekly, we had a downtrend, which we found, what's it called? Sellers got exhausted here and tried to come back up, finding resistance. You can see how it's been trending. So if I trend this very well, this market was coming to the downside. Are you getting it? Came back, found resistance. Are you getting? So if I should draw something there, you see that the market never lies. it came back and found resistance. But when it found resistance, I'm coming. When it found this resistance there, the market was supposed to do what? Continue to the downside. Because if you use your Fibonacci trend extension level, if this market was, or probably your Fibonacci retracement levels, you should know that after every break of structure, what happens? The market comes back to 0.5 Fibonacci retracement levels. And when you come to that Fibonacci retracement level, hold on, let me take some things up so that you see how the market actually works. So what was happening here, if I should take this off, the market was actually coming down. After every break of structure, what happens? The market finds a way to retrace, give you discount to the downside. So this was a break of structure on the weekly, and the market actually does what? Find a way to retrace back to the upside and get into that previous support and resistance. Now, let me give you how many confluence now. We had this confluence broken support that was broken with this that might turn resistance. That's one. Then use a Fibonacci retracement tool to see wherever it's going to come to. Does it correspond with 0.5? Yes, that's number 2. Number 3, what else can you see again? A bearish engulfing candle. That's number 3. So if you have taken this trade on lower time frame, you see that this was a broken. Hold on. Then we go to probably the Farley chart. That's what I use in trending and lower time frame structure. So if I should show you something that you will see that the market actually did what? How many times? So you see the Farley structure, is even noisy now. The Farley structure is noisy. So this was a trend line. This was the first resistance. We came back for resistance again. The third time, what do you see? A shift to the upside, then a shift to the downside. Then this market was bearish, broke this previous support trend line from the downside and did what? Found, and what I tell you about when the market actually shifted the downside, it does not retrace up to 0.5 already. Are you getting it? So if you are seeing this clearly, what the market does is, if you are using a Fibonacci trend extension level, as it did on gold, the market will retrace a little and keep dropping, because on the daily chart, we have a previous word. So this whole thing you are seeing here right now was that long weekly candle. And this is for our hourly chart. We have 6 4 hours in every day. So all those 6 4 hours you're seeing here. So if I should go back to the weekly chart, you see that. That's why I say always stay on your weekly time frame after you have taken a trade. Always tell your weekly time frame, because the weekly time frame was what brought this bearish. So I need to see a third confirmation. And my third confirmation is what? A bearish candlestick pattern, a candlestick pattern forming on that particular. So this was the third. And I think the fourth one would be my, what's it called? A break on my 20, what's it called? Look at it now. My 20 EMA, you broke my 20 EMA with the same candle, fifth one. Are you getting? So after getting those confirmations, I can take a trade from 1.48670 or maybe 1.4950, depending on this entry, and just take profit probably below or something like maybe 900. Let me just say $900 area, 900 to 400. That's about 500 pips to the downside, which took some weeks to happen. How many weeks? 1, 2, 3, 4, 5, 6. 6 weeks to happen, because it will definitely come and take out this low. That's why they say take profit from bottom here. So that was what happened there. So after that, if I should take my EMA off, after that, what happened? Instead of this market to extend, if I use my Fibonacci trend extension levels, you see that the first take profit was this area. The first take profit was this area. So instead, it came and found a double bottom. Are you getting it? It came and found a double bottom. The market got exhausted and found a double bottom. So for me to confirm that this is actually a double bottom, what do? You know what I do at BitionX. I don't trade again. I wait. I don't care how long it takes me to wait. It is actually a double bottom. This market is what's supposed to break above this resistance. Number 1. Above this previous support, now turn resistance, like what's happening on gold right now. What happened on gold previously? Let me show you now. So as long as it can break above this, the market has changed character back to the upside for me. So if I take this off, now see, I have a lot of area of value. Now I have one broken support that broke. See the break now. This kind of break I want to see on gold to 1880. Are you getting it? Then it broke back to the upside with this changing character. So every double bottom comes with a break of structure changing character to the upside. So without that change of character and retest on that broken resistance, are you getting it? Now you see all the confidence coming in now. Came back and started retesting on that resistance for 1, 2, 3, 4, 5 weeks before it broke structure to the upside again. So after every break of structure, I'm waiting. After this break of structure that happened, what happens next? After this break of structure, this particular area of value now turns what? A resistance. This particular area of value now turns what? A resistance, a new resistance. Sorry, this particular area of value, this, as long as this market did this, like I'm telling you right now, see, look at it, to double bottom, break, change character to the upside, came down, broke again. This market has actually switched to the upside for me. So imagine how long it will take me to wait again to get a proper trade. 1, 2, 3, 4, 5, 6, 7 weeks before I could get a proper trade. And how did I get a proper trade? It gave me a bullish engulfing candle. It gave me a bullish engulfing candle. So if I should take all these what's it called off and go to probably the 4-hourly chart to see the price action that actually happened in that particular place, you will see that after this broken structure, a lot of people would have been wanting to take all these trades. Yes, you can see that it trended, broke structure to the upside, retraced and got into the supply zone, switched again and broke structure to the upside, then found a way and switched back again. So you would have been able to trade all this, knowing that this market might actually come and do a joker, which broke structure to the upside and 4-hourly chart again. It tested that particular area. If I should expand and start again for you to see, you know that this is a weekly chart. So your 4-hourly chart is actually what, very dirty and messy. So if you get carried away, you might lose a lot of money on these price actions that happen, because this was a market that was finding support on that previous broken structure on the weekly time frame. So it broke structure to the upside again, came back to these demand zones and found demand. I even switched here again and went to the upside, breaking structure, telling you that this market has actually done what, shifted perfectly well to the upside. So after that shift, we found a way again. Look at, don't get carried away. Broke structure to the upside, switch to the downside on the 4-hourly chart. You see why I like using 4-hourly structures to trade to trend on the market. If I should zoom that way so that you're not supposed to be losing money. Look at, this is a broken structure. This is a broken structure to the upside. So you know this market might get exhausted around these areas. You don't want to trade again, because after every broken structure, you're supposed to wait for a switch back to your demand zones. So this was a demand. Are you getting it? This was a demand. You're not supposed to break below this. But let me show you something now. See how market switch. This now turns to what? Your recent low. So for this market to break to the downside, that's a change of character that happened there. Are you getting? So it's coming back to where? This supply area. So anything that makes it find supply. So you might just even enter blindly, 5,900, put a 100 pip stop loss above and trend this market to the next resistance. So I would have traded this as a market structure trader and say that, okay, 5,900, I guess in the 5,900 area, put my stop loss 5,9,600 and 6,100 pips. I'm taking it to the next area of value, which is a 3.3 to 330 pips to the downside. That was a trade I would have made. I get to leave again and wait for whatever is going to happen, because if I've taken that, this market was doing what? Breaking structure to the downside, come back again to this area of this new, what's it called? And break structure to the downside again, come again, break structure to the downside again, come again. It couldn't break structure. Here became resistance. So what happened? So even though I was finding it was support, and it broke structure to the upside, came back to this. Now look at, let me show you something else. We both know that this was a supply area, right? And the market was not tapping into supply. So just put it that the market has not gotten into supply yet. So I will name all this as liquidity because they built for a very long time to do what? To come and take everybody out. So this is a liquidity concept. I've talked about this for good before. So for you to take liquidity at the top, that means you to take the one at the bottom also. To take liquidity at the bottom also. So if I see this liquidity concept that taps into, I will wait because I know it will come and take liquidity at the bottom to enter into these, what's it called, major support from the weekly time frame. I guess liquidating everybody down there and finding a way to come back to this previous supply zone. So that is one. So I have a reason for going deep into this particular downside like this. Now look at what happened. The market was, came to this supply zone. So this whole area is still supply. Are you getting it? Came to this supply zone, or that's not supply again because we broke structure to the downside. So for us to break structure to the downside, here becomes our new supply zone. So here becomes our new supply zone. So if you are taking a trade from knowing that this, we've drawn this thing here before, you would have seen this switch. So you would have taken a trade all the way from this area. Are you getting it? You would have seen this change of character. Take a trade, then probably take maybe 100 or 200 pips from 500, 5, maybe 500, 100 pips would have gotten there. So it's not as easy as I'm saying it, but this is how I trade because I trade market structures. So here now would have been maybe would have lost money, but definitely if you are using a proper risk to reward, you would have, even though you are carried away, you would have made money knowing how your market is going. So you could take this off, and probably we are getting carried away and we're losing money on this particular days. What do you do? Go to your higher time frames. Go to your higher time frames. Your higher time frames will tell you whatever is happening. So on the daily right now, what did you see? We trended up, came back, couldn't break. So we switched back to the upside. So for us to switch here, that's a switch. We switched because a market that is supposed to be going down is supposed to do what? Come down, break structure to the downside, come up to this supply, find supply. Even gave us an evening star on a daily, which was not valid. Are you getting it? And even came and found. Now look at. Let me go to maybe 2 hourly chart. I need to see something in that particular place. When it broke structurally downside, it came up, came to the supply, found supply. Look at it switched on the 2 hourly time frame to the upside, and here became what? That place became what? So use your lower time frame to see the exact price action that is happening because look at. There's a reason I'm going as deep as this into EURAUD and tell you that EURAUD has been trending perfectly well because when it found on the daily time frame, you can see that since we broke structure to the downside with this, I guess we broke structure to the downside with this, definitely here becomes the supply zone. This was the supply zone. I guess we came into that supply zone and even broke this candle. I don't care. A break is a break. So I'll consider this a break because we're not supposed to break above. But a lot of people call it liquidity. No, that's a break. That's a break, a change of character for me. I call weeks breaks because you're supposed to tap into it. I tap into that supply, sorry. Just tap into that supply zones. Don't break it like this. Don't even do this joker. I guess in consider. So I'll put this change of character there and be watching this new area of demand zones. I'll be watching these new demand zones if we will actually do what? Switch back to the upside before saying that this market break character, showing break structure to the downside again. It was not breaking it, but instead it was consolidating, even tried to do a change of character, but broke back to the downside. So broke back to the downside again and switched. So immediately I saw that switch, I think I took that trade. Immediately I saw that switch, probably is one of my videos around what's it called? What are these dates? This date is, I think, February. February. See what happened. The market actually on the 2-hourly chart or the lower time frame change character what back to the upside. Bring your Fibonacci retracement tools in. The market never lies. The market never lies. Came to 0.5, gave us a doji or a hammer. It gave us a hammer and even gave us a morning star and even broke structure to the upside. So here becomes what? Demand zone. So if I should take this off, I have a reason I'm doing this is I'm coming. I know that you're exhausted and you're tired probably listening to how the market actually was. So here becomes what, like I did on Gojo. Here becomes a new what, new support, because it was previous what, market structure trader, previous resistance that has broken up. So if you come back into it and you are in this trade already and you brought structure to the upside, you'd have taken a trade and waited for this retracement to this area. So if you have used a tighter stop loss, you would have been taken out with this particular candle. So always use a proper stop loss, 100 pips, 100 pips, even from, if you are taking a trade from here, 474, 5475, let me see 75 pips and 47, come to 75 pips to 375. Look at the 375 pips, 100 pips to the downside. This market won't have taken you because you would have been underneath all these areas of value. Are you getting on the 2-hour or 4-hourly structures? That's why I said that I treat higher time frame structures because you trend more for me. And what happens? Immediately what it started trending to the upside. So this was another break of structure that happened there again. And what happens? Look at it after a break of structure, we do a retracement to 0.5, 0.6 kilo zone, and to switch again to the upside from you again. Once you switch, you enter 100 pip stop loss. Now you know that the market is a trending market to the upside on your daily or your weekly chart. So hold on. Sorry. So that being said, are you getting it? That being said, we've trended this market now. That being said, it will not take me to it now take me to where we are right now. So if I should take everything I've done here off so that we can see whatever is happening. Look at now. This market became an uptrend all the way from here. So this market switched to the upside from here, breaking structures. It broke structure back to the upside and even came and even broke this particular structure now. Now this market broke the structure to the upside. So what were you expecting? What were you expecting? After every break of structure, what happens? The market retraces back to the downside. And this was what I've been looking at to enter since. That's what now look at, pay attention. If you have not gotten here, this was a break of structure to the upside. So after every break of structure, the market does what? The market retraces to the downside. And how? Look at the market even came into our Q zone, which was, today is what, July, on Monday, July 3rd, I did a video that the market should retrace back to the downside. So if I should leave the weekly chart probably to the daily chart, you see that this market, after every break of structure, after every major break of structure, what does the market do? The market does an ABC move to the downside. Are you getting it? If the ABC move stops at a particular area of value corresponding, now look at what I was looking for. Hold on, don't get carried away. This was what I was looking for today. I think, was it today? No, last week. This is what I was looking for. I talked about this market. If you can retrace, do an ABC move. We took this trade 500 pips to the upside from 5885. Go and watch my July, I think Friday. Today is what? What's happening? June 14th video. I think June 14th video. June 14th video. So those videos. So if you are not carried away or you did not do a proper analysis, you would have seen this. Now let me show you again. If this market actually broke structure on the weekly chart, to the upside and it's supposed to retrace. It did an ABC move to the downside. Now, last 2 weeks, what happened? It gave us a very, very bullish, bounce on this area of value. Let me go to the lower time frame so you see this very well. Now, this was the previous higher high we had. We broke above it and, retested on it. So I put what's it called? That was when I put a rectangle there, then extended it that if we are bouncing from this area, because the market was supposed to do what an ABC move to the downside after that big construction on the weekly chart. So if I'm finding previous support, previous resistance, now turn support, if I'm finding support in these areas and switching to the upside, I will take a trade all the way to this to see if we can break it. If we break it again, what are you seeing again? A retracement to the downside. Hold on, let me carry it away. So when we took this trade, I was waiting for me to re-enter into this market again. Because what? We have broken structure again to the upside. So after every break of structure, expect what? A retracement to the downside. But this was a break of structure and also what? A change of character back to the upside. So if this market was on a downtrend before, we needed it to switch back to the upside, which it did here, and change character to the upside. After changing character to the upside, what happens? The market retraces 0.382 after every first retracement, which we had here now. So for that reasons, I got this retracement to 0.382 while waiting for 0.5. Now waiting for a shift on our lower time frame since yesterday. I'll be 2 days now. We're waiting for this shift on the lower time frame. So I went to the Farley structures and I was waiting for that particular shift. So when I brought out my Farley structure, hold on, don't get carried away. I got that the market was actually in this. Okay, see what happened. See what happened. See what happened. See how we're able to switch back to the upside, first of all, on the lower time frame. Look at, remember this was our area of value. This one. Remember, don't get carried away. From that major weekly, break of structure that brought us back down here. So if I should go down, look at, remember this was our break of structure and we did an ABC move to a major area of value where this particular resistance now turns support and on that support again. So if this market is to continue trending to the upside, that means it should come and break a structure because we actually did a 400 and 600 pips to the ABC move to the downside and found support at this major area of value. So for it to find those support at those major areas of value, that means the market needs to switch back to the upside, which it did a change of character back to the upside. So I am going to go to my 4-hourly structure again and check whatever is happening. So when this market broke to the upside, look at the change character here back to the upside because this was the previous lower high. So this market actually changed character the 4-hourly time frame to the upside and did what? A retracement of just 0.382. Look at, and started continuing to the upside. So we took a trade from here, we took one trade from here, we took the second trade from here, and took profit from 6,500, I think, from 6,500 to 6,885, so 500 something pips. So took that profit and waited. We were waiting for this retracement to the downside. Now, look, don't get carried away. I want to drive something for you. What was this market doing? Higher high, higher low, higher high, higher low, higher high, higher low, higher high again. Are you getting? So wait and look for a particular area where you have, where you have where a higher high and higher low meets, or just since you've broken structure to the upside, just put your Fibonacci retracement tools in properly. What were you saying? The market actually finding a switch, not just a switch, actually finding what? Previous resistance now turns support. We got a support yesterday. Today we are getting a major bounce again. So it's not just about fundamentals or hawkish UK Euro being hawkish or something. You will definitely find. So what I was waiting for today before I started taking trades from $350 to $300, 631 300 area was this switch. I need a change of character back to the upside. because this market was actually, I don't care, it was, on a downtrend. So this last lower high we came back, we found the double bottom, support, four area, 1, 2, 3, makes it an area of value. So we found the another one. So I have first support, second support, third support, but I still need a change of character to the upside to continue this market to the upside. So if that has been the case, are you getting? Don't get carried away. If that being the case, I waited for these 2 hour, or I went to my lower time frame and say that, okay, this is support, this is a new support, this is another support again. Change character to the upside with this and make this whole area what? My demand zones. So after every switch back to the upside, what did I tell you? Don't get carried away. It retraces just 0.382. So this is change of character to the upside. So I'm waiting for that switch, 0.382 switch. So this, if it's here, and I have a change of character here, here becomes my what? Here becomes my kill zone. So I'm waiting for how many? I've entered some trades already. I'm waiting for a retracement to 0.382. That's if I get a switch now on the 15-minute chart to the downside or the 5-minute chart to the downside. So I'm waiting for a switch back to the downside. Then I'm expecting 0.382. I'll take a trade there. I'll put on that one here, 0.5. I'll put on that one here. But we might not get to this 0.5, 0.6 because we just did what? A change of character to the upside again. So 0.382 is what I'm expecting to take a trade again. So if that should be the case that we are switching back to the downside in the lower time frames from there, what am I expecting? Let me show you. So put a change of character here. What am I expecting? I'm expecting a retracement, a little retracement back to the downside and take this market to the upside. So if that being the case, are you getting it? Come back to your higher time frame to see whatever is happening. Because if this was actually a retracement and has been confirmed, it has been confirmed on the lower time frame, 2 hour, 4 hourly chart, a change of character has happened, and we're retracing 0.3. This market is actually what? Because we've broken the structure. So this market is actually doing what? Coming back to these areas at the top here. Are you getting it? Because if you even use Fibonacci trend extension level from here to 0.382, what are you saying? Our first take profit is 6700, second take profit is 6800, 61800, because this market on the higher time frame, probably the weekly time frame, is still in a massive uptrend to the upside. So if I should even use a proper 1 week flow, the market is coming to 0.7080. So from where we are right now, it's a 426 to 482 is a 600 and something pips. So let's say 600 pips. You're on a one lot and you can leave this to run for a very long time, swing it on a very long time. Instead of swinging it you can enter a trade one lot, swing 600 pips for a very long time, probably weeks or a month or two. Or use your hourly, flow, because you know where the market is going to already. First of all, let me say the daily. From here right now, you have an uptrend all the way to 700. From here is 300 pips to the upside. Are you getting 300 pips to the upside? Then overall to 700, 600 pips to the upside. So because when you get to these sort of areas, you definitely do what? To this supply area, will definitely get a bounce. I guess back to this, probably this major areas of value again. You now see that this place will not turn the major area of value. Then you take on that trade again and then take profit here. I guess which corresponds with your other side. Take profit there, then come back again, take on that profit here. So we can do another 1, 2, 3, 4, 5 to the upside before finding a way, to change character back to the downside, probably to these major areas of value before going up again. But for now, the trades we'll have for now. So if you're following your market properly well, trust me, from the higher time frame, trust me, you might not always be wrong. You are having just 100 pips stop loss and you are making over 300, 400, 500 pips on the long run. That's the kind of trade I want to take. Everything, because overall, this market is still in an uptrend to the upside. So, and it's still giving me what? Bullish bias, because from what you're seeing here, this is an evening star resting on a weekly evening star, very bullish, resting on an area of value, and on the 4-hour time frame is even continuing this market breaking structure to the upside. So it's still a bullish vibe, as I've explained below. So whatever I'm waiting for right now is this retracement, which I don't know if you're going to get again. Waiting for the retracement, but if we're not going to get it, I'm in the market already. I guess, and even though it comes back down, 428 right now to 4200 is 280. So I might reduce my lot size. I guess, and if I was supposed to use one lot, you have about 220 pips right now. My stop loss is normally 100 pips. So I can divide that stop loss into 220 and reduce my lot size to 0.4 or 0.5. I use 250 pips. Knowing that if I was supposed to get the remaining retracement, then I'll take the remaining 0.5 to add to it to get my 300 pips to be upside to 600 to the supply zones. I get things, because as it stands right now, if I were to do that, it's even giving me a liquidity right here. I guess so. This is how I train my market. If you want to trade with me, contact me. If you don't know how I do this or how I've been explaining this and it has been coming down 100%, I've been talking about EURAUD all the way since this move to the upside, because the markets are never wrong. Look at it. If this market was supposed to go down from this area of value, are you getting it? The market, I was waiting for a switch to the upside. So this is a previous low and this is a previous high. We're not supposed to break above this. The market was just supposed to come to the supply zones, and it even came with a very large buying momentum, come to the supply zones and sell off, continue breaking structure, come to the supply, continue selling off. But immediately we switch, just know that the market is in an uptrend. We should take it back to your major supply zone. So you can take 200, 300 pips, one lot, $2,000. Just wait for a proper structure. So for me, EURAUD has been trending perfectly well to my liking, because if I should take everything off again, hold on. If I should take everything off again, I can say that EURAUD is in a very good growth stage by giving us this sweet treat that it has been giving us all this one. So break, retest. It's there, it's just there to show you. It's there to show you. Trust me. Then if you are in this trade and you're scared that, you might come to the downside, where would you know? Come to your lower time frame. You will know from here. If it's going to fail, trust me, this break of structure that happened right now, we might just get to these areas and find a switch. So watch out for your levels, watch out for your trade. If truly there was it's going to fail, it's going to come into these areas. Are you getting it? Because this whole place are what? Liquidity. You can see now, this is liquidity. So this was a continuation I did not see, because this is actually a bullish continuation pattern, break, retests, break. This was a descending triangle, a descending channel that found support, double bottom here, broke to the upside. So if you're retesting here, I guess in it, you can enter to continuous market to the upside. But if it's not, if it's coming and breaking this particular level, and you are seeing a switch on 15 minutes, just leave. That's why you're supposed to have entered all the way from 350 or 3400 area, which I entered from using 50 pips. So if it's coming back down and breaking below here and I'm seeing that switch on the 15 minutes, there's no even need of me waiting for 400 pips. I might just leave. But definitely, it might just retrace and come to these demand zones and continue going. So I will wait and leave except it's giving me that full bearish vibe. my weight, and I will not even let it get all the way from 400 to 100, 400 pips dollar area. So if it's taking me out with 100 pips on this area, no problem, no problem, no problem. Are you getting it? Because once it's taking me out, it will switch then 0.382% again. Are you getting it? Enter a sell and take 275 to all the way to these good, what's it called? 600 on that 275 or $260 area, because here now becomes what? Here now turn resistance. Are you getting it? Here now turns what? Resistance. So the markets are always there showing you whatever it wants to do. Enter 100 pips stop loss again and take you 200 pips, making your money. You lose your 100 pips, you lose from here. Are you getting it? So the markets are never wrong. You are the one that has been saying it wrongly, because if it's really going to switch to the downside, to tell you, because it will break below this area of value. Are you getting it? So the moment it breaks below that area of value, breaking structure, it will retest that area of value and give you a bearish candlestick pattern, like I will always been doing now. Give you that bearish candlestick patterns, and you enter 100 pip stop loss, take you down again. So stop using tighter stop losses. Plan your trade very well, and you see that you'll be profitable, because you are using what good probabilities. But overall, does this look like what wants to fail, or because of due from all the analysis and we've been giving from the downside? No, it's not giving that one. I would have taken a trade off from 250, 2500, and I've been like maybe 180 pips in profit right now. But I usually do what? I usually wait for my switch first. Change character for me. I know this might be a double bottom because it's finding support, but I need this break. I need that break, please. Even though it's giving me that, okay, this is a bearish vibe, like it's doing on good right now, like I told you on good. Are you getting it? Even though it's giving me that bearish vibe, are you getting it? I still need. Sorry, am I? Hold on. Coming. Here's our trade. EURAUD is going very well. So I still need what? This is, sorry, I said bearish. This is a bullish continuation pattern. I still need a breakout of this bullish continuation pattern. Are you getting it? Now, it broke out with this candle, giving me a very, very good bullish signal. That's number one. That's broken out right now. First signal with a very, very good bullish candle. Second signal, then breaking and changing character to the upside. Third signal, and it's not breaking below here. Fourth signal. So even though I enter this trade from here and I have a 200 pip stop loss to 230 pip stop loss, as it is right now, I'll put my trade on that here, knowing that this is a support, previous support, 5 confluences, knowing that if it breaks below that confluence, it's going to change character back to the downside and retest and continue going down. But as it stands right now, EURAUD is in a massive uptrend according to the weekly time frame structure we have. Look at it. First week bullish, second week bullish, third week now being bullish. So I'll drive that market. It might even get all the way to over, 1,000 pips, over 2,500 pips to the upside. But I will just be, following my fairly structure, how it has been trending, and don't be greedy. I guess. And so right now, the first trade we have conclusively is this one. First trade we have right now is this one, taking profit at 6,700, so 300 pips, 6,693. This is what I have. I don't know if I drew it very well. Let me go back and okay, there. Your touches are very important also. Here. Let me see. Touch very well. Yes. So I'm taking this trade all the way to my first TP. You know how I'll do it, 6,690. I'll say 6,680. So first TP, my first TP. Sorry, okay, hold on. My first TP, second TP, dot TP 6800. So I should take my Fibonacci trend extension levels off. So this will be my first TP exactly at the top of that. So TP1. TP2. Use the value. Yeah. Then TP3. Use the value again so that you hit very well. Don't be greedy. 6800. So the market always gives you what? I usually tell you one thing. The market gives you time. Not rush, rush, rush. No, 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 no. Plan your trade very well. You'll never be wrong. Look at if I upload this trade for you now, you see that I can sleep now because it's even giving me very, very good price action. Broke out of good bullish candles. I'm seeing those 4 hourly candles and I've done a proper analysis and it's giving me that vibe. It even gave me, a bounce, a very, very good hammer that bounced and gave me that bullish vibe. So I can go to bed and rest right now, knowing that I have in the next how many days, how many 4, 5, 1 week, I might get to this extent and make my 400 pips. And one lot is $4,000 from where I took it from. Something dollar. The 2 lots is about $8,000. A 10 lot is about $40,000. So it depends on your capital. A $1,000 account, you can take this trade 0.1 on this trade, risk $100 on it. Are you getting it? In case we get a retracement back to the downside to these entries, to these previous broken resistance. In case, so I don't know if we can get it to, in case we get a retracement back to $350 area, take 250 or 200 150 pips on your $1,000 account, $150 stop loss, knowing that if we break below it, you get this last trade is invalidated, which might not happen. And you take a $400 in 2 weeks out of this trade with your $1,000, that's a 40% in 1 or 2 weeks that you might get from this trade. You get in a few days, 1 or 2 weeks, you can get it. So that's a very, very good investment. And that's how I invest here at VisionX. Are you getting? So this year, I will end this video for now. And if you don't understand how this market actually works, this video is enough for you to be a professional and a profitable trader, because this market is never supposed to break below this area again. Just continue breaking structure again, come again, breaking structure again, come again, breaking structure again, come again. Are you getting it? That's how the market works. The moment you see it break a previous structure and retesting, it might come down sometimes, take liquidity. Are you getting it? But if it's not breaking above this structure again, before you can start. So, and I want to say something about this particular part. Now we might go above here, then you see us coming down below here. Oh, this market has switched to the downside. It might still continue. A fundamental can bring it and down until you find, when you get to this area, finding bearish candlestick formation, price action, and you are seeing your 1 hour, 15 minutes switching like this, couldn't break, broke structure, enter from here, put your stop loss above here or above here, 100 pips. Then you can start trending it to the next area of value, or all these previous, and start taking profit from all these previous areas. That's how market works. You can't just because of the fundamental news that happened and it brought market to the downside and just say, oh, the market has reversed, it's going down. No, don't work that way, because see what is coming with. See bullish candles is coming 56 minutes now. You see on that Farley candle close again. Buyers are stepping in massively. Are you getting it? If you watch this video more than 5 times and you don't still know how to trade, that means you're not supposed to be a trader, because I've broken everything down perfectly well. This took me about an hour plus right now to do, and it's for free. These are things that, if I'm in America, you see companies paying me $1 million, $2 million, to find out. And I'm still looking at my economic calendars. I'm also looking at, my news, watching news coming out from the euro, any negative news coming out from the euro. I will still know also. So is there anything that is going to corroborate what's going to happen next week from tomorrow? Let's see on Friday. So tomorrow is Friday. Let's see if there's any news that is going to invalidate whatever we have right now. Because today, this week, okay, today is Thursday. Thursday, the news, where was the time right now? The time is 5 o'clock, 5 p.m. So 5 p.m. we have General Buba Presidential Naga speak. So definitely this news right now, you now start seeing hawkish words from the president as in General Buba President Naga of the Euro speak, which is a two. We're getting it then. Tomorrow, which is on Friday, we have the Gema Industrial month on month. So is that going to affect very well? We don't know. So on then I'm not trading on Friday. We'll have a news of the dollar average hourly, which is average hourly earnings 0.003 forecast. They will have non-farm period tomorrow, so that's why I'm not even trading the dollar, the gold right now, because it has not given me a clear direction. Are you seeing what is happening here? So on gold right now, on gold right now, I just need, if I want to enter gold perfectly well, I just need these two things to happen. Break above this previous area, what's it called, resistance. I get it, you test it and hold it so that I can start entering 100 pips, continue to the 1980, or break below, break structure to the downside well with 4 hourly candles. I get it, then I find a, what's it called, 0.5, what's it called, entry to the downside and trade it extension to the downside. These are how I trade my market. I don't just enter any market because it's not giving me any 4 hourly structural break and retest. It's just doing whatever I want to do on lower time frame. Now, what do I tell you about lower time frames on gold or any structure? They tend to fail. They tend to fail. They tend to fail because this market is still what, bearish. Came now, couldn't break above, found resistance. So if I'm you, you would have taken this trade and continued this market to the downside. So all those news you are saying, they are just there to distract you. If not, the market, the news, these fundamentals act based on what they are saying, the growth they are saying in this market that has happened already. And it's people that are putting money and removing money from this market. So they have the first-hand information, they have money more than you. So why are you trading based on what you feel? This market is hapless. Follow with the market. Flow with the market. I saw something on Euro AUD. Wow, even Euro GBP is even changing character to the upside right now. So, and it's even giving me a bullish vibe because this was a break of structure to the upside. So, if it's actually coming back to this area of demand and it's switching, changing character to the upside. So, whatever I'm waiting for right now is break above this. Let me just use proper break above this previous. I guess it. Look at it. It's as simple as ABC. Wait for it to break. Well, this was the previous resistance because it might come here, find resistance again, and sell down. I guess me, but if you, I don't know, you don't compare your AUD movement to any other pair. A good news might come out of GBP and might not flow to UAUD. So whatever I'm looking for right now is break above. It has broken one internally though on the lower time frame, probably the 15 minutes time frame. But I'm not going to bank on that. I want a higher time frame break. I get me. So you can see in the 15 minutes it has broken above and it's giving this vibe entry now to take probably if 30 pips to this resistance. So if that's not what I'm looking for, I want a proper, probably a 2 hour or a 1 hour break above it. I guess in break above this changing character to the upside, then we test these areas of demand, new demand, which has held. It has held now, so I can enter, but that's blind for me because it might just continue to the downside if it does not break. If we find resistance here, I guess. So whatever I'm looking for right now is a break above. We test conservatively. I'm a conservative trader, and I can enter using 100 pips or 60, let me say 100 pips over 573 to 575 pips stop loss to the downside entry, then take this trade to the next area of value, which might take this market back all the way to the next major resistance level, 800. So from here we are right now, 572 to 872 is about 300 pips to the upside. That's how the market actually does work. Are you getting it? So, and I'm saying something on EURAUD also. EURAUD, where are you? EURAUD, look at it now. The markets are always right. Look at it very well. Same thing we said on the lower time on the EURAUD right now. Support, support, support. So give me a reversal pattern, and it's giving me a ascending triangle, which is a bullish reversal candlestick pattern. I guess now I've been entering the trade, but it has been consolidating inside here and be taking me out. So break above it, we test it. Are you getting it? Then I enter, then continue this market to the next resistance. So this from here to here, this area is enough for you. From here to here now, you can see double support, 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 finding support, giving you a bullish reversal chart pattern, which is an ascending triangle. We're testing that bullish reversal chart pattern, or we're testing this demand, that bullish chart pattern, and giving you about 400 pips to the upside. 400 pips is enough. So if you have the capital to take this one also with the EURAUD, this on that trade here, bring up for you again. So you take this one, you take the EURAUD, you take EURGBP, 400, 400, 1,200 pips. One lot is $12,000. So what are you doing? What are you doing? And it's just Euro is just telling us that I want to enter into a massive, because if it can overpower the Canadian dollar, it can overpower the Australian dollar, and it can overpower the what's it called? It can overpower the pounds. That means there is some bullish, very, very hawkish news coming out from what's it called? Uh, of euro. Then maybe go to the higher time frame. Is there anything corresponding also? You can see that on the daily chart, this market is just still in an uptrend because it broke structure to the upside, changed character to the upside with this, and came back to 0.382, which is finding. And where is it going to if it continues that way? If it continues that way, where is it going to? If it's stopping at 0.381 and finding resistance there, that means this market is also doing what? From 434 right now, let me say 434 is coming all the way to 545. Wow, 5675. So let me use a date, a price range from here we are right now. How many pips? To 0.618. It might get here, but let's take 0.618 for that supply zone. That's about 1,159 pips to the upside. Imagine that you leave this trade to run, or even though it takes more than 1 month, even though it takes up to 1 month, imagine you leave this trade to run 1,000 pips, 1,000 pips, 1,100 pips to the upside. From where we are right now, it's about, on a one lot account, that's about $11,000 and $11,000, I guess, in take profit. So do a proper analysis and don't FOMO. Just wait for your proper, break of structures to happen, and your change of characters will happen perfectly well for you. I guess not, because to me, this was liquidity you took, so you just needed to come down to retest the particular area of value, and gives you a bullish continuation, a bullish reversal, a bullish continuation vibe, which is even happening here right now, and it's even breaking out of an ascending triangle we're testing it. It's a reversal confirmation pattern. So I'm waiting for this reversal to take this trade back to over 1,000 pips to the upside. So I'm working on that trade right now. This is how the market works. It never lies. It never fails. It never fails. Trust me. It never fails. Okay? It never fails. Learn your. Come, let me teach you all the necessary candlestick chart patterns. Teach you all the what's it called? Teach you all the chart patterns and how the market works as I've analyzed in this video. This video is very important for each and everyone in the trading world. Each and everyone in the trading world. Let's analyze together, build structures together, use proper risk and money management, apply good psychology, and you see that you'll be more profitable in this business. Because whatever I'm saying here right now, since we've broken structure to the upside, here becomes our next supply as in demand zone. So this demand right now, come to use a proper, I get break above it. We test that demand. We test this previous resistance non-term supply. Sorry, to test that previous resistance non-term support. Are you getting it? Or to come deep into demand zone, find demand and switch again for me to enter. Put my stop loss below it or below here, 100 pips. And even though the fundamental is going to happen, continue this market 1,000 pips to the upside. But what I just explained right now, just imagine taking this trade and you put in a long position from here, or let's say from here, then use 533, then 533, 433, 433, or even 200 pips. Just bring it down, even how many pips to the downside, and you extend this. You extend this. You extend this to the upside. That's over how many pips? That's over 6 to 6 risk reward ratio. Do you know how much is that? You're risking 2,000 to make 16,000, 6 times 2, $12,000. Is it not the same thing we just talked about right now? So if you have $10,000, you're risking $2,000, which you know the trade might not come down because you've done the proper analysis and you're even looking at your trade every 4 hours to see how it is trending, and it's trending perfectly well. You might not even lose up to the $2,000 in case it wants to go wrong. But a bullish signal giving you this signal, and you're sitting on your 4-hourly time frame, and you are watching if this what's it called, ascending triangle is going to fail, this demand is going to fail, we should know the demand. If this demand is going to fail and your stop loss is below this ascending triangle, under the ascending triangle, so even though it comes down, you entered right now, it comes down to these areas and bounce. That's how to trade. So let me end this video here, edit and upload for you guys to watch. Because this is what I want to trade. This is what I want to trade. EURUSD, give me what I want to trade. Everything is working. Everything is there. It's not lying. It's showing you everything it wants to do. See what EURUSD is doing. It's in a descending triangle. It's contained inside a descending triangle that if it does not break to the upside, we test, it cannot continue going. But all I want is that if it must continue to the upside, break back, we test here and continue going, or break to the downside, we test these particular areas of value which you are seeing here. Are you getting it? And continue going down. If it claims it, continue breaking up. So watch out for your areas of value are the only thing I want to see you take trades from. So these are the previous resistance, now turn support, is becoming support. So if this is what it's going to do, it's going to tell you break, retest, and continue going, break down, retest, and continue breaking down. Are you getting it? Or reclaim, and continue going on. Are you getting it? That's just how this market moves. That's just how this market moves. It will never lie to you. It will never lie to you. To just definitely tell you what it wants to do. Whatever it wants to do, to tell you, do it with USD. To tell you, I'm not here to do this other analysis. I'm just showing you how this market actually does float. It will never lie to you. Never will the market lie to you. You are the one that does not want to wait for your proper areas of value to hold, because even pounds wants to go. Pounds is wanting to go because there's broken structure with testing, and we are still here. So if you are here and you are go to your lower time frame, just wait for proper break of structure to the upside again, breaking structure, coming back to retest that demand zone and getting it enter before you continue going if you want to trade pound. Because if pounds does this, I get if pounds does this break structure to take or find a double top and breaks this structure, we test this area of value, we continue going down. That's just how the market works. I guess it's as simple as that. It's just you that does not want to wait, or you don't know how to, a price action works, or you don't know how what's it called, or you don't know how your areas of value look at what what's it called. Um, we still have a low here, so it might still hold. Look at what EURAUD is doing. It broke down. The testing here will send us down. Or find a support here and continue this market breaking above here, testing these areas of this support and continue going. Just wait for your proper areas of value, proper supply and demand areas. That's just how the market works. I will not go further from here. Bitcoin, what is Bitcoin doing? BTC USDT. I'm still on the BTC USDT trade from June 15th, and Bitcoin is still in an uptrend for me. So I'll know overall Bitcoin is still consolidating inside these inside this area. So what I'm expecting from Bitcoin is break above, continue going, or break below, reclaim and continue going. I guess and so. Bitcoin, just areas of value. Look at previous resistance now turn. So if it must come back to $28,000 area. Then if you cannot break, then you continue downward. But Bitcoin has broken out of, look at what I told you about gold right now. Look at gold, Bitcoin. It broke above. So if you want to come back, just come back to 28,000 and continue to the upside, because this support, this support. Even though you break this one, I've been in this market since $25,000 already. So I know you might not break this one. So does not break that one. That means that you are retracing probably 0.5 retracement levels. I guess it. So either you are retracing 0.5 retrace back to the downside because of this broken structure that has happened here. I guess it. 0.382, which is $28,900 area, continuing to the upside. So Bitcoin is still bullish for me. Wow. I can continue talking like this for the next 2 days, because this is what I love how to do best. The markets are never wrong. You are the one that does not want to wait for your proper areas of value, because this is a very good support, which is finding support. So you can just continue going on. So I'll still be in that market until it switches to the downside and breaks structure again. And I know that Bitcoin is now bearish to the downside. I guess we should still have $25,000 as support where my entry is, and continue this market or continue selling to the downside. So watch out for your proper areas of value. Always take trades from areas of proper areas of value. And that's all I'll say. My name is Mr. Mary Nelson, the CEO of Vision X Limited. Take care and bye for now. Bye.